I have pulled up, which is very important for identifying when a news trade is about to happen. And when I say news trade, I mean a pre-planned news trade. Now, Donald Trump does send out tweets on his Twitter handle, and that does move the market. But those aren't really pre-planned, and those are kind of a surprise. If you were watching the markets, yesterday was a prime example of how his Twitter moved the market substantially, actually. So we're going to kind of avoid that type of news, and what we're going to be talking about is pre-planned news on a calendar. So if you guys would like to trade news releases, you're going to want this website to be saved or bookmarked. You want econoday.com, and this is the home page. You don't really need to sign in or have an account or anything. What you can do is you scroll down, and you have two options here. We have global announcements, which these global announcements can move the market. And then we have U.S. announcements. Now, if you're trading the ES, you're going to want to go to the U.S. announcements. And this is what you'll see. I recommend saving exactly what you're seeing here as a home page on your trading PC. Hopefully you don't do anything else on your trading PC other than trading. That's a whole nother topic right there. What we're going to do is we're going to focus on this FOMC forecasts. This particular trade is going to be around it. And you can see it says 2 p.m. Eastern. So you'll notice there's a red dot next to it. If you scroll down here there's a thing, and it might be hard to read on your screen. But anything with the red dot is a market moving indicator. Green is merit extra attention. Black circle, other key indicator. And then you'll have consensus and then reports. All we care about is the red dots, and not every red dot affects the ES, okay? For example, this FOMC forecast, this definitely affects the market, and it was chaotic, actually. However, 30 minutes later at 2:30 p.m. Eastern, this Fed Share press conference right here did not affect the ES at all. And this is Wednesday, June 19th. And I also do want to give you a little more context. The summertime is a lot harder to trade. A lot of people are on vacation, so there's not as much volume in the markets, and it can be very difficult to really find a lot of scalping opportunities. So generally in the summertime, things you may have to change things up a little bit. Just want to give you that heads up. And then also we're sort of going through rollover period. So when I pull up my depth of market, it's going to be the September contract. And I just switched from the June contract to the September contract today. And if you're not familiar with futures rollover, there's plenty of videos on YouTube that covers it. Google it. Learn about rollover. I'm not going to explain it here. I just want to dive into the trades and the techniques behind it. So anyways, just to give you all a heads up. Now, again, we only care about the red dots. And when you go to this calendar, you can click on the report. It says why investors care, and it gives you a definition. I don't care. I'm not an investor. I don't care about any of these numbers. None of these numbers matter. All that matters is come 2 p.m., the market's going to get very volatile, okay? And there's going to be scalping opportunities around it. Now, news trades can yield you a lot of money, but they can also make you lose a lot of money. I personally like to trade them. A lot of people are against them, and it's very understandable why. Some people want to wait maybe a minute or two for the market to settle down, but I like to trade the initial news release if I can get a good gauge on which direction the market's going to be. heading. And you have to be very quick on news release trades. This is a type of trade where I recommend you have a hotkey set up. You're not going to use limit orders. Well, you sometimes can, but usually you're not going to use a limit order on a news release. What you're going to do is you're going to market order in, you're going to market order out. And you want to be very quick about it. Just the market's going to rip in one direction or the other, or both directions. It really depends. And you want to be very quick about it. And as I show you the trade, I'll explain what I'm talking about right now. So I love these news releases. Now, again, I don't care what the report is, and not every red dot affects the market. And also, you'll see tomorrow there's a jobless claims consensus at 8:30, and there's this Philadelphia Fed Business Outlook survey at 8:30 as well. They're both red dots, but the thing is, 8:30 a.m. Eastern is when the markets officially open, and that's when the ES, when a bunch of volume starts to come into the ES. Now, future markets are 24 hours, I get it, but people don't start trading it until usually 8:30 is when all the volume starts to come in. So keep that in mind. Now, these releases, they're right at the open. You already have so much volume coming in at the open that you discount these news releases. These are types of news releases you're not going to necessarily trade just because they're at the open. You want to look for something after the opening. For instance, we have on Friday this existing home sales at 10 a.m. Eastern. Well, at 10 a.m., the market's already going to be open. Okay, it's already going to be trading. There's already going to be volume in the market. And what you want to do is right before 10 a.m., about a minute or two before 10 a.m., you want to see if the market starts thinning out. If it starts thinning out, this is how you know there's going to be a good news play. So let me cut the screen. So here's the depth of market. You're going to notice something in the bottom right that's a little newer, a little different. This is just tape. Okay, all this is the tape over here. Usually I have it on another monitor, but I decided to bring it over here. Just discount it. I'm probably going to utilize it in future videos and just point things out on it. But for the most part, we focus on the depth of market. We focus, like all the videos, the depth of market, the order flow and the depth of market is the most important thing. So unfortunately, I don't have footage of the market thinning out. I do have another news release video on my YouTube page. It's a lot older, and it has the Treasury bond markets up. If you want to watch that as well, go for it. It'll show you the market thinning out. But right here, the market's already thinned out. So what do I mean by the market is thinning out? So what that means is, look at the blue and red columns, your bid and ask. Notice how thin it is. There's only 35 down here, 52, 27, 33. Yes, you have 155 there. 37, 36, 57. And if you go up, it's equally as thin, 61, 59, 61, 55, 38. So if you've been watching a lot of my ES videos, my volume profile plays, pretty much any video where I trade the ES, you're going to notice that the average number in these blue and red columns are around 200 to 300, even 400. Okay? That, when you're seeing how these numbers are a lot lower in this particular example, that is an example of how the market thinned out. So what happened was the market was thicker. You know, there was 200, 300 contracts on each price level on average. And about a minute or two before the news release, and let me cut the screen. So currently we're about a minute before this release. So it's 1:59 p.m. Eastern. So 1 minute before this FOMC forecast, usually the market starts to thin out. So what happens is people start canceling their orders at each price level. Okay? It's like before a tsunami hits the shore or whatever. Usually the wave, like the water will recede, and then the big wave comes. So think of it that way. So you have your shoreline, you have the water at the edge of the beach, and then right before the tsunami or hurricane or whatever hits land, that water is going to pull away. And that's the same thing that's happening here. People cancel their orders because depending on how this news release goes, or just because it's a major market moving news release, everybody knows that it's going to get very wild. And you don't want to be in a trade before the news release because you'll see why. So enough jibber jabber. Watch how slow it is, and then watch how fast it starts to go right when we hit 2 p.m. Eastern. So I'm going to go ahead and play it. No volume. Now, also watch the tape. I know I said ignore it, but notice that not many orders are moving the tape right now. Okay? The tape's barely moving. Barely moving. Okay, now we have this 200 that just pulled up. Now the tape's starting to move a lot. Now it's starting to zip around really quick. The market's still pretty thin. Now the tape is really moving quite a bit. Look at all this pink and red, okay? And then the market just falls down. Now generally, the way I would play this news release, I was a little late to the party on this particular example. I do trade it. I'll explain to you why I took the trade, but I want to take the initial move usually, so let me show you exactly what I'm talking about. So I rewound the video a bit. So it's clicking up and down here. And notice the volume profile. Notice how 29.1875, we haven't traded here yet. So just keep that in mind. We haven't traded there yet. The market's zipping up and down. You wouldn't want to take a trade yet because we're still trading near this point of control area. So the market's obviously it went up and then it came back down. You would you'd want to take the trade right when you take out this low here. So right here is where you would want to consider getting in. And then the market just beast moded down by quite a bit. So it happened quicker than your eyes could really gather the information right there. So again, let me show you that. What you're going to probably want to do is you're going to want to have a resting order here. So what I would do is I would, I mean, it got down there very quickly. So what you're going to want to do is probably have a resting order, like maybe right here at the 29.1875. What I would do is click on this red box and wait for the market to get there, or I could just be very quick on hotkeys. So I would market order in right when we got here. Again, you have to be very quick. Now watch, so right here we're at this 29.19 even level. Watch how quickly it zips down. This is why you have to be very quick. So what you would want to do is you want to probably market order in right here, and then bang. So we went from this 29.19 even all the way down to here. And as you can see, this 160 stepped up. And if you look at the heat map, you can see where that 160 is making the market glow, and the market bounced off of it. So I'm not even going to wait. You would want a hotkey out. You would want to market order out right here or hit the hotkey. So right here is where you would want to get out. So it would be literally a 1 second trade. I didn't get that. I'll show you my trade in just a second, but let's go through this one more time. So again, it is the news. I'm sorry, it goes so fast. Okay, again, keep in mind the volume profile. It's very important. This is the point of control. And really the range of the entire day is not very big. And when you're at a major volume profile level where the point of control is, the major point of control is, you want to be be very cautious about taking that trade. Because as you notice, it goes up and then down. That could fool you. So it goes up, and that could fool you. You wouldn't want to take that trade necessarily. Okay? Now, bonus points because we're reaching the bottom of the volume profile right here. This is where you're going to want to be very quick. You either want to have a resting order to get in here, which can be risky. I mean, it's all risky altogether. Or you want to market order in. So right here, you would want to have your fingers over two hotkeys, your market order sell and your market order buy. Obviously, we're short biased here. It's going to go down, so we would want to market order sell. And then as soon as the market rips through this low of the day, as soon as you see it struggle, you're going to immediately hit the market order buy button to get out. Don't even try to limit. Don't even try to get that extra tick with the limit buy, okay? Because then you have to wait in the queue and it may just bounce. This is something where you market order in, market order out, okay? There's no really limiting on this particular price action just because of how fast it is. So again, we're looking at this 29.19 even level. You're going to want to get in there. And notice something here. I know it's happening so fast. Okay, right there. You notice this 114. It quickly stops the market very briefly. This 114. It stops the market briefly. This is the low. The buyers, for some reason, somebody's stepping in front of this train. But somebody is trying to stop the market right here, and it briefly stops it. Just watch. Okay, did you see? And then bang, it zips through. That right there, that sort of price action, I know it happens so quick. That right there is key to get in. And notice 142 market orders trade into it. Okay? So watch how it happens. So again, I was late to the party, but if I wasn't, because honestly my hotkeys aren't programmed, it doesn't matter. I'm reprogramming them right now, so I kind of missed this, but I'll show you the trade. I'll show you a trade. But again, I'm watching 29.19 even down here. There's that 115, bang, bang, bang. Get in there. You have to market order in. Look how it zips down. Where does it? It's starting to struggle here. Market order out. And then look how it just comes back up. Look how it comes back up. I mean, if you didn't market order out down here, you're out 1, 2, 3, 4, 5, 6, 7 ticks. Okay? It's almost $100. So again, here we go. Watch this level. Get in, get in, get in. Get out, get out, get out. Right here, get out. That's where you want to get out. And then it comes right back. Look how fast it came back up. So this is where we would have got in, this 29.19 even. Look how it just came back up, and it would go against you this many ticks. So let's watch how that trade would play out. And let's see how many ticks you would have gotten out of it. So theoretically, you got in at, what, 29.19 even? So watch it. Watch it. You're going to want to get out somewhere right here. So if you market order out, so you got in at 29.19, you would have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 ticks. Let's call it 13 to be safe. Okay? I'm not saying you're going to get out at this very low end. Pretend we got out at 13 ticks, because you're not going to get out at this bottom. You're going to get out somewhere in here, because that's where you notice the struggle. 13 ticks. Okay, so 13 times, I mean, pretend you're trading one contract at $12.50 per tick times 13. That would be $162.50 in the matter of seconds. Okay, in a matter of seconds, you would have made that kind of money. And now watch how fast it comes back. Boom, right past our entry. So we're going to watch it one more time, and then I'll show you my entry. So like 100, 2 100, 3 100. So about 3 seconds. That trade is a 3-second trade for really good money. And the thing about these news trades is, once you're really good at them, you can scale up a lot more size. Because, I mean, there would be no reason why you couldn't trade 10 contracts on it if your account would allow you to do it. And that would have been $1,625. So on news releases, if you're good at them, you practice them, you understand them, these are the types of trades where you can definitely consider scaling up some size on them. So I'll show you my entry now. We're going to let it continue to play. Okay, did you notice that 1,000 just flashed right there and then it pulled off? Probably not. It happened. Look right there. It happened so quick and then it pulled off. Right here. And they pull it off right when the price gets to it. Okay, the price doesn't trade that 1,000. Notice there is no 1,000 right here. Okay, somebody threw in 1,000 contracts and canceled it. Okay, that's exactly what happens. And that's what happens before the news release. All of these contracts get canceled. And the price was coming to it, and they wanted to get out of the way only in case it would go through them. And I assume somebody was putting 1,000 there because they were trying to hold the market up. But then it came to them, so they realized they had to get out of it before it traded into them. So watch that again. Watch that 1,000 come in. So 1,000, look, there was only 51. Oh, man, it happened so fast. I'm trying to pause it right on the nose. There we go. Okay, notice there's only 51 here. Watch as the price gets right above it at this 29, 22.50, and it'll just disappear. And it'll still be 51 sell orders here. Nothing trades into it. This gets canceled. So it got canceled. And then it blows right through it. So I'm looking for a zone to get in at this point. Obviously it's trading around the point of control level again. So right around here at the profile edge, this is sort of a volume profile play. I mean, it is a volume profile play. However, I'm going to put this in its own playlist. I'm going to just have a playlist of news releases. However, the volume profile is key in this particular play, so keep that in mind. I'm looking for a trade down here because the volume profile, it's starting to thin out right here. So somewhere in here is a natural support zone. So I'm looking for where the market could possibly struggle. Notice it bounced right about here at this 29, 21, 25. So I go long there. Now notice this. See this red that came up? That's my emergency stop. It is 1, 2, 3, 4, 5, 6, 7, 8. It is 8 ticks below me. Now, I usually don't have stops on because if you've been watching my videos, I manage my trades, so I try to get out of my trades, through trade management. I don't ever put a hard stop. Now, this is an emergency stop only in case it blows through me. I don't want to lose more than $100 on one contract. Okay, so I think an emergency stop is also good just to have. And for example, the other day, my computer in the middle of a trade started updating and reset itself. And then when I got back on, I managed to somehow break even out of the trade. And I'm like, okay, that's it. I need to put an emergency stop. Now, I usually always have one for these news trades, but from this point forward, you're going to be seeing the emergency stop. Never let the price get to it. Okay, you don't ever really want to let the price get in. And then I just take profits there. But again, what I was saying, you don't want the price to get to your emergency stop. So why did I take that trade? Look at the way the price is right here, it's struggling at this where the volume starts to taper off on the profile. So I know right here this is a good bounce point, and I also saw 600 flash right here. I know it's going so unbelievably quick. Let me see if we can pause it. There it is. See, we had 600 briefly pull in right there, and then it came off. I know it happens so quick. It's almost impossible. So what I did, the market started to slow down and tighten up in this zone. This was a high volume node right here. I think I took 62.50 on that trade. So that was a 5-tick win, and it happened very quickly. But I decided to get in on this high volume node right here at 29.22. I was very confident in the trade, and I was confident that it would come back up somewhere around the point of control or somewhere near this volume profile, these low volume profile nodes. So let's try to watch the trade again. So the market slowed down right in this price zone. That's sort of also keyed me off to why I took the trade. And now I'm looking for profits, and I put my profit target right here at the 29, 23, 25. Let me see if I can show it to you, because literally right when I click it, it gets me. Oh, sorry about that. It gets me out. Okay, so I put it there. So why did I put the trade? Why did I put my profit target there? Well, this is low volume nodes. Yes, it does go through this, and I could have got a few more ticks, but I'm trying to play it safe. I miss the initial move, which sucks. It sucks, but I'm not going to be pissed about it because there'll always be another news release. Just make sure you have your hotkeys ready before it, unlike me. So I placed my target to get out right here because there could be a possibility that the price stalls right here, because again, there's low volume nodes here at 29, 23, 50, and 75, and then we have a high volume node here at 29, 24. And also, I mean, the longer time goes after the news release, the more the market starts to wind down. So as you can see with the news release, the market was very sporadic, chaotic, with very massive moves. After the market has been trading for about a minute or two, it starts to wind down, okay? The moves aren't as sporadic, and they become a little more predictable. And that's why people who usually trade news releases wait about a minute or two. And this particular trade you're seeing is a prime example. The market's starting to wind down from that huge pop, and now it's a little easier to read the order flow and to get an idea of where to get in the trade. So again, what I notice is this large volume node here, and the market sort of struggled right here. So that was sort of my key to get in the trade. And again, I'm taking profits up here because I don't know if the volume, if the market is going to act like resistance on these low volume nodes since we're winding down. I don't know if maybe it'll stop here and just start getting tightly wound up in this point of control area. So let's watch the trade again, and I'll show you the entry. Now notice, so I did notice the market was pausing right here. Let's watch that. Again, watch this video several times if you have to. It's very hard to really, if this is your first order flow video, you have to watch the others. This is very hard to gauge what's going on. And really, the thing is, the numbers aren't necessarily as important. So this is an important thing I haven't mentioned. the numbers aren't necessarily as important as the way the market is moving up and down. I'm looking at the velocity of the moves. I'm looking at the way the market is moving, not necessarily the numbers. Yes, the numbers are important, but the velocity of the way the market's moving is pretty important, especially, I mean, it's always important, but it's very important on news releases. So I noticed that it's just like stopping right here. And it's not necessarily because of the order flow, the numbers, it's just where it's stopping and the velocity of the move. So I know that sort of lines up with the edge of this volume profile. Again, watch how we come down here. Watch how we come down here. See how it pauses and it goes back up. And this is it. It started pausing right here, and that's how I took the trade. I know it happens so fast. I know it happens so fast. Watch again. And I'm not looking at the tape right now, so again, ignore the tape. The tape was merely sort of an example of what it looks like with volume just pouring in. So watch where it turns around. It's going to come down here. It turns around right here at this 29, 21, 25. We come back up to the point of control. We come back down, and I notice it starts to pause there. So for me, that's a good entry, and it immediately goes in my favor. It doesn't go against me one tick. So it could have gone against me one tick. But the thing is, let me show you again. This is so hard to comprehend, I know. I'm trying to explain the best I can. So again, we come to this 29, 21, 25. So the market's starting to tighten up. I'm not going to put a limit order here because it's starting to trade in a tighter and tighter range at this point. So I know that if we come back down, it's not going to come back down to this level it just touched. I know it's going to come down a few ticks above it. And I'm going to do more videos on this, so if you don't understand it, you will. And you can kind of see it in my volume profile videos. When you have a volume profile trade like you see here, it'll go to the extreme edges. The price will bounce between the extreme edges, and then it starts to tighten up. It won't go to where it was previously. It'll go a few ticks below. So pretend it goes all the way up to 29.24, and then it comes down to 21 even. But then it goes back up, and it doesn't go to 24. It goes to 23.50, and then it comes back down to 21.75, and then it goes to 23 even, and then it goes to 22 even, and then it starts to tighten up right here, and then it just starts trading 22.50, and then it starts trading these three price levels right here. So you'll see that happen a lot. You'll see the price hit the extreme edges on both sides, and then it will start to wind down as that range starts to tighten up, okay? And that's exactly what I'm seeing here. That's why I didn't try to limit order in at this extreme bottom where I saw it previously stall at. That's why I came in a few ticks above. So sort of watch where the price goes as far as the range. So it goes down to that 21 even. So it touched down to this 21 even, and then it comes back. I get in, it fills me, and it doesn't even go against me one tick. What a fantastic entry, okay? And don't think I'm a pro because I pulled that off. Sometimes that doesn't happen. But I just knew that was an area. Again, high volume profile node. This is a bigger volume node compared to the price above it and below it. So right there, I'm like, you know what? This could be a turning point. Usually something like that can act as support and resistance, and that's exactly what happened. It tagged me in, and then again, I get out right there. And if you notice, yes, it trades about a tick or so above where my exit was, but then it falls back in. So really taking profits there was a good call. So understanding the volume profile is really key to what's going on. So again, let's watch that trade. I know I'm replaying it quite a bit. So it tags the 21. Okay, and then I go to the high volume profile node. Doesn't go against me. And then I take my profits right where it pretty much stalls and comes back in. So that was a good little scalp there. I believe it does zip up past this. But I just wanted to show you guys that. So if you don't quite comprehend it, there will be more news release videos. Generally, I have a hard time trading around good news releases. I'm either not online. Usually I'm not online around some of the good news releases. I'm going to try to start to do that. But good ones don't happen every week. So, you know, you can get a few good ones every couple days out of the month. So they're not always there. You'll go a week without a good news release to trade. So keep that in mind. Now let me show you something here. This is sort of a trade management thing. Here's the P&L. I was only on for maybe an hour or so. And I made $212.50 total. Now notice my P&L sheet. The particular trade you saw is this one here, where I made $62.50. I did take a trade right before the news broke and made $50. And then after that, I made $87.50 on some other movements. But notice that these three trades that are in the green right here, those totaled up to $200. Notice this: 1, 2, 3, 4, 5, 6, 7, 8 trades were made, and I only made $12.50 between these 8 trades. So again, these 3 trades right here yielded me $200, and then I made $212.50. So I lost, $37.50 between these, and then I got back 25 of it. Then I got back the additional $12.50 plus an additional $12.50. And when your P&L starts to look like this, it's time to turn off the computer. You can see I started to take a lot of shots. There were 4 break-even trades and 2 losses. So, when your P&L starts to look like this, you're going to want to consider stepping away from the computer. What I was doing was I was taking shots, and I'm happy for $200 for the day. I don't need any more than that. It's near the end of the day. There's no point in going forward. So really, I try to get a little bit more out of the day, and then I realized, it's not worth it. I don't want to lose what I already made. So I'm just showing you guys this because I want you to understand that there are times you need to step away from the computer. And as you can see, I took 1, 2, 3, 4, 5 shots at the market before I was able to get some sort of profits. So generally, you don't want to take 5 shots and not make anything. If that's happening, you want to step away from the computer. Okay, and then I took another shot. It was a break even, and then another shot, and I got my money back plus some. And then I'm like, you know what? Turn off the computer. And here's the thing: even though I was up $200, I lost $37.50 of it. You don't want to try to get back what you lost. Never do that. So I know this, what I'm telling you, isn't necessarily a news trade related thing, but as I go forward with making videos, I just want to show you certain things that can help you understand when maybe you should step away from the computer, go outside for a little bit, do push-ups, exercise something. When you're starting to take a bunch of shots and you're not really getting anything out of it, step away from the computer. Just step away from it, come back, and get back in. So I just wanted to show you guys that, and I hope you enjoyed the video. We will see you on the next